Many of those Western multinationals have aggressively entering and trying to position in these fast-growing emerging markets. China has been one of those. But as they follow the traditional, this conventional thinking of more of a manufacturing-based, supply-side oriented, scale-oriented approach so that they can gain the market dominance and drive a long-term profit out of that, has been failing. They realize these consumer behaviors in emerging markets are changing, different from what they expected. They realize the whole market dynamics in emerging markets has changed too, such as fast emerging, very competitive local competitors. They cannot match well in certain dimensions. At the same time, many of the local logistics and infrastructure are not like they expected, which make it difficult to pursue these manufacturing-oriented, based on well-integrated local distribution systems and so on, are not working. This new breed of consumers, particularly those fast-emerging middle-class consumers, right? First, there's very little loyalty towards certain products. They're not even sure what they want, right? Very conspicuous demand, meaning the purchasing decision is not necessarily economics oriented, sometimes it's socially driven demand decisions and so on. In emerging markets, there's a high sort of a diversion of the consumer categories, right? The high income class, the low income class, and so on. That's why I've been talking about this more of a granular growth models in emerging market, targeting sort of the mass consumption market with a standardized approach is not going to be able to address this highly diverse group of fast emerging consumer groups. So what it proposes is called scaling the tail. See, the traditional mass consumption model, now have to forget about it, which does not guarantee them profit. May give them short-term growth, but it failed to give them profit, sustained profit growth. At the same time, multinational firms now face in the corporate headquarters that you have to deliver not only short-term growth, but profit too. So meaning profitable growth is the ultimate strategy goal for multinational companies in emerging markets. So how do you do it? We call it scaling the tail. Meaning now you move away from the sort of mainstream of the mass consumption segment. You look for rather unfilled new niches, particularly maybe in the high-end areas. Find those niches, you move into those areas with your advanced managerial skills, products and technologies, and you scale out of it. You flank the market segments or product categories, either series of different products or brands, and so build a scale out of it. There's an agglomeration effect. You create synergy by continuing this growth into multiple segments and brands. So over time, that's what will give profitable growth to multinational companies. May not short-term fast growth, but again, on a long-term basis, this might be the only way for multinationals to achieve profitable growth, at least in the consumer goods and then retailing sectors.